Very good morning to all of you, my friends. I hope you guys are doing good. In the last class, we started with marginal costing, wherein we discussed that in marginal costing, only variable cost is charged to the cost of product. As far as fixed cost is concerned, it is wiped off against contribution. Further, it's not a part of cost accounting wherein it involves calculation of cost or something like that. So it has nothing to do with cost calculations. But it's a management tool of decision making. It's a part of management accounting and it assists management in decision making, just like standard costing. Further, we discussed what is marginal cost. That is the cost for producing additional unit. One additional unit, that is one unit extra if we produce how much is the cost, that is we call as marginal cost. Apart from this, we discussed variable cost. That is the cost that varies according to production. वो cost जो production के हिसाब से vary करता है. In proportion of the production it increases, in proportion of the production it decreases. That is variable cost. As far as example is concerned, all the elements of prime cost, that is direct material, direct labor, direct expenses forms variable cost. Further, apart from this, all the variable overheads also form part of variable cost. Now, next part, that is what we discussed, is fixed cost. That is the cost that remain fixed. The cost that remain fixed irrespective of production is fixed cost. I repeat again, the cost that remain fixed irrespective of production is fixed cost. आप कितना भी production करें, the fixed cost will remain unchanged. Apart from this, we started with the basic marginal costing equation. That is the sales minus variable cost is contribution. Sales minus variable cost is contribution. Contribution minus fixed cost is profit. Further, we discussed PV ratio, that is profit volume ratio. We discussed it as contribution divided by sales into 100. PV ratio shows us the percentage of contribution to sales. हमारा contribution जो है हमारी sales का कितना percentage, shows the relationship between contribution to sales. Further, we have discussed few assumptions that if the question is silent and the sales is increasing or decreasing, it means what? The units are increasing or decreasing. So what I want to conclude is that even though there is any change in units, the PV ratio will remain constant at all the level of sales. However, if it is clearly specified in the question, specifically asked in the question or specifically mentioned in the question that there is a change in selling price per unit or variable cost per unit, then only the PV ratio will change. So when talking about the assumptions of marginal costing, if the question is silent, we will assume that the selling price is constant. Plus the variable cost per unit is also constant. Same here, Mantanjali. Very good morning to all of you. So PV ratio shows the relationship between contribution to sales. Now, thereafter we discussed break-even sales. Now, break-even sales is that level of sales where there is no profit, no loss. I repeat again, break-even sales is that level of sales where there is no profit, no loss. Or we can say our sales is equals to our total cost. That is break-even sales. As I told you guys in the last session, that at break-even sales, the profit is zero, the fixed cost will remain constant. So my contribution will be what? Fixed cost plus zero profit. So ultimately, contribution is equals to PV ratio. This is how we get the sales. So this is how we derive the formula for break-even sales. and in units, so at break-even point, after recovering the variable cost, at break-even sales, after recovering the variable cost, we get contribution, and our contribution is that much only, that is our fixed cost. So at break-even sales, we recover the variable cost as well as the fixed cost, and our profit is zero. So my point is, when talking about break-even sales, first of all, the foremost thing is that after deducting the variable cost, we get contribution. And contribution is that much only that it is able to recover the fixed cost. So at break-even sales, we can say contribution is equals to fixed cost. Now, the point is, if you guys have any doubts, you guys can ask me as far as the concept of this point is concerned. As discussed, that let's say I'm the manufacturer of this pen, and this pen is made up of, let's say, 8 rupees. 8 rupees is my variable cost, and my selling price is rupees 10. So my contribution per unit is rupees 2. Now, as I said, at break-even sales, we recover our fixed cost only. So let's say my fixed cost is 50,000. Let's say my fixed cost is 50,000. Now, as I said, at break-even sales, we recover our fixed cost only. So 50,000 in aggregate we have to recover. How much we want? 50,000. And per pen we recover rupees 2. So how much pen we have to manufacture and sell to recover our fixed cost? Very simple, 25,000. So this is the concept behind this formula, that is fixed cost divided by contribution per unit. Now guys, if you have any types of conceptual queries, why I discussed, why this formula, because again in marginal costing also, there are no formulas. Just like standard costing, marginal costing is entirely concept based. Apart from this, if you guys try to memorize the formula, you will be able to solve only limited number of questions. That is the questions which are on a particular pattern base. But if the examiner do ask trickier question, I assure you guys, you will be able to solve only when you guys are thorough with the concepts. So if you guys have any doubts till now, you guys can ask me, waiting for your queries, what I have discussed in the last session. So whatever the queries you have, you guys can post me, giving you 2 minutes time, and thereafter we'll start with the remaining part of the chapter. Am I audible to all, loud and clear? Please confirm, guys. Am I audible loud and clear to all? Vikas Bansal, can you help me out? What exactly you are asking? Vikas Bansal, can you please ask in detail what exactly your requirement? I mean, what all doubts you are facing? Good morning, Tanishka. So now I can assume that there are no doubts. So now let's proceed further with the next part of the chapter. That is my desired sales. Now the concept is similar to break-even sales. I assume that you'll be able to answer this part. So let's start with this part, that is desired sales. Now let's take the same example. Let's say my sales is 200. My variable cost is 120. My contribution is how much? 80. My fixed cost is 40 and I'm getting a profit of rupees 40. Very good morning, Poonam. Thank you so much, Mantanjali. I'll guide you, Shivam, don't worry. So now, if the examiner, I repeat again, guys, if the examiner is asking you to calculate break-even sales, what you will do? Simply 0 is my profit, 40 is my fixed cost. So my contribution will be 40. As discussed, the relationship between contribution and sales, we call it as PV ratio. That is contribution divided by sales in 200. So my contribution sales ratio is how much? 80 divided by 200 into 100. That is 40%. So this contribution 40 is equals to 40%. So how much will be 100%? That is rupees 100. So my break-even sales in this question is rupees 100. So what I want to explain you guys, that at break-even point, my desired profit is how much? 0. I repeat again, at break-even point, my desired profit is how much? 0. Now, let's take a situation wherein if the examiner is asking that you guys have calculated the break-even sales now, what if in case if you want a profit of 200 rupees? The question is, the examiner is asking that what if in case you want a profit of 200? Or let's say once again, let's say what if in case you want a profit of 160 rupees? How much sales you have to make? How much sales is required to earn a profit of rupees 160? Can you guys help me out with it? I repeat again, the question is saying that break-even part is all over now. Now, what if in case if you want to earn a profit of 160? How much sale is required to earn a profit of 160? Can you guys tell me? How much sales is required to earn a profit of 160? Can you guys tell me? Again, using the same concept of break-even sales, try to solve it, guys. I repeat again, the examiner is asking that what if in case if your desired profit is 160 instead of 0, how much sale is required? Can you guys tell me? Waiting for your answers, guys. Shivam, correct answer. Arvind, correct answer. Vikas Bansal, no need to memorize the formulas. Atulya, incorrect answer. Himanshu Gupta, incorrect answer. Poonam Sharma, incorrect answer. Alok Kumar Chaudhary, correct answer. Sneha, correct answer. I repeat again, the concept is similar to break-even sales. What if in case, if we want to, instead of zero profit, we want to earn a profit of 160. So how much sales is required? So guys, in this question, how much profit we want? Very simple, 160. I repeat again, how much profit we want in this question? 160. In break-even sales, my desired profit was 0. But in this question, how much profit we want? 160. My fixed cost remains same at all the level of sales. So this 40 will remain same at all the level of sales. So my point is contribution minus fixed cost should be how much? 160. Contribution minus fixed cost is how much? 160. So how much it will be? Very simple, 200. So 200 minus 40 will be 160. Many students did the mistake that they wrote 120 and they calculated 300 as the desired sales. The answer is incorrect. Very simple, contribution minus fixed cost is profit. So my fixed cost is 40, my desired profit is 160. So how much contribution is required? Very simple, 200. Now, as I told you, this PV ratio remain constant at all the level of sales. As the basic assumptions of marginal costing is what? Selling price per unit is constant, variable cost per unit is constant. Therefore, PV ratio is constant at all the level of sales. So this 200 is equals to how much? 40%. So how much will be my desired sales? 500. So this will be the balance. Many were able to answer it correctly. Few did a slight mistake that they took 120 here and their answers were wrong. So no worries, guys. I understand sometimes in rush you do make some calculation mistakes. So that's completely okay. Hitesh Jain, how come you got 400? I'm surprised. So my point is, if you want to earn a profit of 160 rupees, how much sales is required? 500. Now what we actually did, we did 200 divided by 40%. How come 200 is derived? Very simple, 40 plus 160 divided by 40%. So herein, my 40 is my fixed cost. 160 is my desired profit divided by PV ratio. The formula is similar to break-even sales. At break-even sales, fixed cost, my desired profit is 0 divided by PV ratio. But what if in case, if my desired profit is not 0 but more than that? No worries. We have to calculate the contribution. How contribution is calculated? Very simple, fixed cost plus my desired profit that is asked divided by PV ratio. So if you guys have any doubts, you guys can ask me. Waiting for your queries, guys. So my point is, once you cross break-even sales, the extra contribution what you are getting is what? Profit. Once you cross break-even sales, the extra profit what you are getting is what? The extra contribution you are getting is what? Profit. So herein, my contribution is 200. If I recover my fixed cost 40, that is what? My break-even sales. And once we recover the extra, if we have extra contribution, that is 160, that is what we call as our profit. So how this formula is derived? Do you guys have any doubts? You guys can ask me. Waiting for your queries, guys. I request you guys to please copy this explanation. Any doubts? Mohammad Farad, Rajiv Kumar Das, Chetra. How come you got 120? I'm surprised, Chetra. Very simple. What we did in desired sales, 200 divided by 40%. How come 200 is divided? Very simple. We have to recover our fixed cost as well as we want to earn profit. I repeat again, when talking about desired sales, the desired profit is given. That at this point, that at this much profit, how much sales is required? So very simple. When talking about desired sales, when desired profit is given, we have to recover the fixed cost as well as our profit. So how much contribution is required to recover our fixed cost and desired profit? Very simple, 200. So 200 is the contribution, and the contribution sales relationship we have already calculated, that is 40%. So this is how I got my desired sales of 500 rupees. When talking about, since I said that in desired sales we have to recover the fixed cost as well as my desired profit, so fixed cost plus desired profit divided by PV ratio. I request you guys to please copy the explanation. I'm using the same question in all the concepts so that it is easy for you to understand and relate the things. Let's take one more question on desired sales. Let's say my sales quantity is 500, 10 is my selling price, 5,000 is my total sales. So my contribution will be the per unit contribution will be rupees 3. This is my less we will deduct the fixed cost. Let's say my fixed cost is 900. So my profit will be 600. Now, as discussed, PV ratio, we will calculate the relationship between contribution and sales. That is, we call as PV ratio. That is contribution divided by sales into 100. So my contribution is how much? 1500 divided by 5000 into 100. So this will be 30%. Alternatively, as I said, the major thing is this per unit relationship should be maintained. So we can simply write 3 divided by 10 into 100. So both the approaches are correct. Very good, Poonam. Now, let's say the examiner is asking us that my desired profit is 3,000 rupees. So how much should be my desired sales? How much sale is required to earn a profit of 3,000? Now herein I have to recover my fixed cost as well as I want extra contribution that can help us to get a profit of 3,000. So can you guys tell me how much will be my desired sales? How much will be my desired sales? I want desired sales. Can you guys tell me? Vaishali Agarwal, correct answer. Perfect. I'll be discussing this part, Chetra. Don't worry. I'm discussing one more question, similar question in this class. So don't worry, Chetra. Shivam Singh, correct answer. Vaishali Agarwal, correct answer. Shivam Durya, correct answer. Yes, Nalini, Mantanjali, Tanishka, Rajiv, Mangeshwaran. Waiting for your answers. Mohammad Farad, Rafika Mehman. How much will be the desired sales? Okay, I've got answer from many of you, and I think everyone is able to answer. Very good. I just mentioned the person whose answer is incorrect. Hitesh Jain, your answer is incorrect. I'm surprised, Hitesh Jain. What exactly you're finding it difficult? It's a very easy concept. If you have any doubts, you guys can ask me, Hitesh. Specifically, Dada Subhash Dete, incorrect answer. Rest, everyone is able to answer. Hitesh Jain and Mr. Subhash, if you guys have any doubts, you guys can ask me. So very simple, guys, the same concept. That is, how much is my desired profit? 3,000. How much is my fixed cost? 900. So how much will be my contribution required? 3,900. This 3,900 is equal to how much? 30%. So how much will be my sales? 13,000. So the balance will be the variable cost, or alternatively we can say 13,000 into 70% is my variable cost. Since contribution is 30%, so my variable cost will be 70%. Okay, Vimal Kumar Surolia, your answer is incorrect. Yes, everyone is able to answer, so I'm just mentioning the names whose answer is incorrect. Preeti Panchal, again I'm surprised. I do expect a correct answer from you. Hitesh Jain, can you please ask me whatever the doubt you have? Mr. Subhash also, please help me out with your query. If you have any conceptual query, I'll try my best to resolve it. But I want a correct answer and I expect a correct answer from you guys. So again, how come this formula is derived? Very simple, guys. That is, in desired sales, we have to recover. So what we did is actually, we want a profit of 3,000 plus 900 fixed cost we have to recover. So in aggregate, we have to recover 3,900 divided by 30%. So this will be 13,000 rupees. Or we can say, 1 unit is sold at the rate rupees 10. 1 unit is sold at the rate rupees 10. 1 unit is sold at the rate rupees 10. So 1300 units we sale is required. So we can say, if we want desired sales in rupees, very simple, my desired profit plus my fixed cost divided by my PV ratio. Yes, Mantanjali, it's a very easy chapter. The thing is, you have to be thorough with the concepts. Yes, it depends upon only one equation, that is sales minus variable cost, contribution minus fixed cost is profit. That's it. So now, as far as if you have to calculate desired sales in rupees, very simple, fixed cost we have to recover plus the extra profit we want is what we call as desired profit divided by PV ratio. Now, when talking about calculation of units, either we can simply calculate my desired sales in rupees divided by selling price per unit, we will get the units. Alternatively, the same concept. Let's say this pen is made up of 7 rupees. That is the variable cost. My selling price of this pen is rupees 10. So how much I am recovering per pen? 3 rupees. I repeat again, how much I am recovering per pen? 3 rupees. Now, earlier in the last question, when talking about break-even sales, we were recovering only 900 rupees. Our target was to recover only 900 rupees. Now, in this question, apart from this 900 fixed cost, apart from this recovery of 900 rupees that is of fixed cost, we want to recover extra amount. That is what we call as profit. So in aggregate, we want to recover 900 plus my extra profit, that is 3,900 we want to recover. So per pen we are getting 3 rupees. So we have to recover 3,900. So how much pens we have to sell? Very simple, 3,900 divided by 3. So 1,300 pens. So I'll repeat again, guys, a very simple concept. If you have to calculate desired sales in units, the simple way, again, fixed cost, since we have to recover the fixed cost, plus we have to recover our desired profit also. So in aggregate, we want to recover 900 plus 3,000. Per pen, we are recovering how much? Contribution per unit. This is how we will get the final answer. So 900 we have to recover, plus our desired profit also we have to recover, and per pen we are recovering 3 rupees. So if we manufacture and sell 300 pens, 1,300 pens, will be able to get our total amount desired, that is 3,900. No worries, Preeti, that's completely okay. So if the desired sales is, if the examiner do ask, as far as how the formulas are derived, I have explained in detail. So if the examiner do ask for desired sales, very simple. Fixed cost plus desired profit divided by PV ratio for rupees. Fixed cost plus desired profit divided by contribution per unit for units. So please copy this explanation. In the meanwhile, if you guys have any doubts, you guys can please post your queries. Giving you 2 minutes time, guys. Please do copy and post your query. Rajiv Kumar Das, this is not that fixed cost. We call it as step fixed cost. So this concept is not covered at the inter level. So I'm not discussing that part. I'm just asking if you guys have any queries in whatever I have discussed till now, you guys can ask me. Mr. Vimal Kumar Surolia, I'll be discussing this part separately. Don't worry. I'll be giving questions also, which I don't worry. So now, let's start with the next part of the chapter. That is margin of safety. Now, in simple terms, what is margin of safety? The safety margin. Or we can say how much we are safe from deadline of business. Margin of safety or safety margin. Pooja PS, you can, but if the examiner is specifically asking you to calculate desired sales in unit, you have to follow the concept that is fixed cost plus desired profit divided by contribution per unit. You should not leave any point. अब कोई भी point मत छोड़िए that examiner do deduct your marks. Whatever it is in your mind, present it in your answer sheet. That's it. So margin of safety or safety margin, it says how much we are safe from deadline of business. When talking about deadline, it talks about break-even sales. When talking about deadline, it talks about break-even sales. That is how much you guys are safe from your break-even sales. So let's say this point is my deadline. And at deadline, my sales is 3,000. This point is my deadline. And at deadline, my sales is 3,000. And let's say currently I am at 5,000. So how much safe I am? Very simple, 2,000. I repeat again, guys. This is my deadline. That is, my deadline is 300 sales. That is, it means I cannot go beyond 3,000 sales. I repeat again, sorry guys. This 3,000 is my deadline. अगर मेरा sales 3,000 से कम होता है, तो I will suffer loss. So this 3,000 deadline is my break-even sales. Currently, I am at a sales of 5,000. Currently, मेरा sales कितना है? 5,000. So how much I am safe? Very simple, 2,000. So in short, this deadline is what my break-even sales. This 5,000 is my actual sales. So how much safe I am? 2,000. So when talking about margin of safety, the formula is very simple. That is where I am, my actual sales. That is, I am at a sales of 5,000. What is my dead point? My break-even sales. that is 3,000. So how much safe I am? 2,000. So 5,000 is my actual sales. My break-even sales is 3,000. So how much will be my actual sales? 2,000 rupees. If you guys have any doubts in this part, you guys can ask me. So we can say our actual sales can be divided in two parts. Very simple, guys. Our actual sales can be divided in two parts. That is the first part where we recover our fixed cost, that is our break-even sales, that is 3,000 rupees. And the extra sales over and above break-even sales is what? Margin of safety sales. That is 2,000. So if the break-even sales is, let's say, 60% of the total sales, so margin of safety will be 40%. If the break-even sales is 70% of the total sales, the balance sales will be my margin of safety sales, that is 30%. So if you guys have any doubts in this explanation, I'll be discussing margin of safety. I'll be discussing more some points on margin of safety. So if you guys have any doubts in this part, you guys can ask me. Further, I request you guys to please copy this part. Now guys, as I said, actual sales minus break-even sales is margin of safety sales. Let's say my sales is 5,000. My variable cost is 3,500. My contribution is how much? 1,500. Let's say my fixed cost is 900. So how much will be my profit? 600. So to recover fixed cost, we do make break-even sales. To recover our fixed cost, we do make our break-even sales. Now in this question, the relationship between contribution and sales is how much? That is 30%. So if in this case we want to calculate our break-even sales, this will be 900 divided by 30%, that is 3,000. So this is my dead point. So if we started our sales with 0, if we reach 3,000, it means we are able to recover our fixed cost. Suppose if starting from 0, once we reach at a sales of 3,000, it means we are able to recover our fixed cost. Now, as and when we start recovering, as and when we recover our fixed cost, the extra sales we are getting is what? Our profit. So let's say this pen is made up of 8 rupees and sold in the market at 10 rupees. It means the per unit contribution we are getting is 2 rupees. I repeat again, guys. When talking about this pen, let's say this pen is manufactured at a cost of rupees 8 and it is being sold at the rate rupees 10 in the market. So per pen we are recovering 2 rupees. So let's say my fixed cost is 50,000. So how? Let's say my fixed cost is 1 lakh. Let's take the fixed cost as 1 lakh. So let's say my fixed cost is 1 lakh and my per pen recovery is 2 rupees. So how much pens we have to sell for break even? 50,000. So once you reach that level of 50,000, this is our break even point. Now, if we sell one extra pen, my net profit will be 2 rupees. If we sell 2 extra pen, my net profit will be rupees 4. So let's say if we sell 51,000 pen, 1,000 pen extra over and above break-even sales, 2,000 rupees will be my profit. So once you cross break-even sales, the extra contribution we are getting is our profit only. So guys, here in this case, let's say my break-even sales is 3,000 rupees. So 3,000 into 30%, that is 900 is my contribution, and I'm recovering my 900 as fixed cost, so my profit is 0. So this is what my break-even sales. Now, how much extra sales we are making? Very simple. Extra sales, we call it as margin of safety sales. How much extra sales we are making? 2,000. How much contribution we are getting? 30%. That is 600. So fixed cost is already recovered. So my profit will be rupees 600. So it means what? Once you recover your fixed cost, once you attain your break-even sales, the extra sales we are making, whatever the contribution we are getting is our profit only. So contribution can be divided in two parts. First, the contribution towards fixed cost, and second, the contribution towards profit. So in this case, once you cross break-even sales, if you want to calculate extra sales, very simple. You can simply say that 600 divided by 30%, that is, we can easily calculate 2,000 rupees. So when talking about one more formula for margin of safety sales, we can say the extra contribution over and above fixed cost. We can say this is what? My extra contribution, 1,500 minus 900. Extra contribution above fixed cost divided by PV ratio. So that extra contribution is what? Profit. So we can say margin of safety sales. The formula can be profit divided by PV ratio. So herein I simply want to say that contribution can be divided in two parts, fixed cost and profit. When you recover your fixed cost, it is our break-even sales. When you have earned profit, so the extra sales you are making is what? Or margin of safety sales. So from fixed cost, we get break-even sales, and from profit, we can say the margin of safety sales are made. So if you guys have any doubts in this formula, profit divided by PV ratio, you guys can ask me. Preeti Panchal's shutdown point is different from break-even sales. I'll just check the study material if concepts is there. If any questions are there on shutdown point, I'll be discussing that part separately. So very simple, guys. If you guys have any doubts, you guys can ask me. Waiting for your queries, guys. So in simple terms, once you cross break-even sales, whatever the extra sales you are making, after recovering the variable cost, the net amount of contribution is what we are getting is our profit only. So that's why we have said profit divided by PV ratio is equals to break-even sales. Or we can say extra contribution above our fixed cost divided by PV ratio is our what? Margin of safety sales. So if you guys have any queries in this part, you guys can ask me. Waiting for your queries, guys. You can write the explanation in your notebook that what is the logic behind profit divided by PV ratio. Very good, Mantanjali. Tanishka, any doubts? Isha, Vijay Gore, Rajiv Kumar, Nalini, Rekha, Shivam, any doubts, guys? Preeti Panchal, Mohammad Farad, Rafika Memon, Pooja PS, any doubts? Arvind, Anu Gupta, any doubts? Madhuri Nikhare, very good morning. Where are you, my dear? Any doubts? Siddhappa, any doubts? Neha Murarka, any doubts? Madhuri Nikhare, any doubts? Mohammad Farad, don't worry, I'll be discussing all the illustrations, whatever the queries you are facing. Let me discuss the concepts in detail first. How can you ignore? How can I ignore you, madam? You are the most regular student of my class. I was just checking that you have any doubts or not, Madhuri. Yes, Pooja. Perfectly well said, Saipa Virali, that the extra sales over and above break-even sales is my margin of safety sales. And when talking about margin of safety sales, once you recover your fixed cost, the extra contribution what we are getting is profit. That profit is from the margin of safety sales. So that's why I have said profit divided by PV ratio. Rashmin Kumar, if you have any doubts in marginal costing, you guys can ask me. Apart from this, no doubts of standard costing, Rashmin. Rekha, better if you have any queries in this part, you can ask me. What about the multi-product part and all these things? I'll be discussing this part separately. I just want you guys to be thorough with the basic concepts first. If you are thorough with the concepts, you guys can frame n number of formulas in marginal costing. When talking about margin of safety ratio, Mr. Vimal Kumar, it is what the percentage of margin of safety sales to sales. So let's say if the margin of safety sales is 20% of the total sales, it means the break-even sales is 80%. So this 20% is the margin of safety sales ratio. $600 divided by 30%. extra contribution above fixed cost, what we call as profit divided by PV ratio. So guys, till now we discussed the following concepts, that is PV ratio, that is contribution divided by sales into 100. Thereafter, second point what we discussed is break-even sales. When talking about calculation in rupees, the formula is fixed cost divided by PV ratio. When talking about units, it is fixed cost divided by contribution per unit. Thereafter, we discussed desired sales. When talking about rupees, it is fixed cost plus desired profit divided by PV ratio. And when talking about units, it is fixed cost plus desired profit divided by contribution per unit. Apart from this, we discussed margin of safety also. That is profit divided by PV ratio, or so these are the concepts what I have discussed. Yes, Pooja PS. So this is the part what we have already discussed till now. If you guys have any queries, you guys can ask me, because now I will be asking you the questions and I'll be waiting for your answers. So last 1 minute is all yours. Thereafter, next half an hour, I do expect answers from your end. So last 1 minute for you guys. If you guys have any query, you guys can post your queries. Neha Murarka, I have already explained in detail. I repeat again, Neha, when talking about profit divided by PV ratio, very simple concept. See, the contribution can be divided in two parts, that is the fixed cost and the profit. To recover fixed cost, we do make break-even sales. And to get profit, we get margin of safety sales. So fixed cost divided by PV ratio. In both the cases, it represents a part of contribution. So fixed cost is also a part of contribution to recover the break-even sales, and that extra contribution over and above fixed cost is to get margin of safety sales. That's why profit divided by PV ratio. Rajiv Kumar Das, Mantanjali, Mangeshwaran, Madhuri Nikhare, Saipa, Shweta Jain, Madhuri, any doubts? Ankit Gupta, I'm not getting any of your answers. No need to learn the formula, but yes, you should know how to prepare the formulas for presentation. That is more than sufficient, Madhuri. Thank you so much, Shivani. Ankit Gupta, I'm not getting any of your answer. I think it's your first query what I have got. In fact, first post I have got. If you have any doubts, Ankit Gupta, you can ask me. Jyoti Vadir, when talking about contribution, what is contribution? Fixed cost plus profit. If it is break-even sales, fixed cost plus zero profit. And if it is desired sales, fixed cost plus desired profit. Any doubts, Ankit Gupta? So guys, let's start with the most easiest question of the chapter. Let's say my sales is 1 lakh. My variable cost is 70,000. My fixed cost is 18,000. You have to calculate first question PV ratio, break-even sales, and margin of safety. So guys, whoever is answering, answer all the three questions together. No need to write, sir, PV ratio is 40%. After 10 answers, again I see, sir, break-even sales. So those, whosoever it is, they are answering the question, answer all the three questions together. That is first PV ratio, second break-even sales, and margin of safety sales. So let's see who answers first. Waiting for your answers, guys. Admin sir, are you there? Admin sir, are there any connectivity issues? Because the students are saying that the video is lagging. Huh? Okay, perfect. So guys, let's see who answers first. Waiting for your answers. Quick guys. Hitesh Jain, waiting for your answers. Madhuri, Mantanjali, Tanishka, Ankit Gupta, Rajiv, Nalini. Quick. Okay, Ankit Gupta, I've got the first answer from Ankit Gupta, and I think Ankit Gupta, all your answers are correct. Very good, Ankit Gupta. Himanshu Gupta, all your answers are correct. Perfect. Shivam Singh, very good. Shivam Duria, very good. Karthik Gupta, very good. Ankit Gupta, very good. Vaishali Agrawal, very good. Madhuri, very good. Madhuri, please recheck your comment. It's incorrect, my dear. Janvi, perfect. Very good. Kamlesh Chaudhary, please recheck your answer. It is incorrect, Kamlesh. कमलेश आपने 12,000 प्रॉफिट लिख दिया है. I want margin of safety sales. Quick. Perfect now. Mohit Chaudhary, very good. Ritika Verma, very good. Amritpal Kaur, very good. Neha, very good. Hitesh Jain, again you posted only one answer. I told you to post all the answers together. I've got answer from Subhash. Very good. Rajiv Kumar, very good. Perfect. Thank you so much, Preeti. Isha Jaiswal, very good. Prabhas Jain. I think all the students are scholar now. They are able to answer. I have not got any incorrect answers from you. So this was the most easiest question. Now the next question for you guys. Again, guys, post all the three answers together. That is in rupees, in units, and the number of units. Waiting for your answers, guys. I've got answer from Rekha. Yes, this is 7,92,000. Mantanjali, Mohammad Faraj, Sundhya Agrawal. Yes, all your answers were correct. So waiting for the answers of question number 2. Waiting. Quick. Yashashri, your answers are, you have just mentioned PV ratio. Riya Jaiswal, your answer was correct. Yes, Vikas, your answer is correct. Okay, I've got answers for the question number 2 also, I think. No, not yet. Bharat M, Vikas Bansal, Nidhi Parikh. When talking about the amount of fixed cost, it is 7,92,000 rupees. Selling price per unit 20, variable cost per unit 14, fixed cost 7,92,000. And this is what it is asked, that is break-even sales in rupees and in units. Menka Kumari, your answer was correct in question number 1. Tanishka, yes, your answer was correct. I think I mentioned your name also. Vikas Bansal, your answer was correct. It is 7,92,000. The fixed cost is 7,92,000. Okay, I've got the answer from Arvind S. Break-even sales in rupees, units, and the units. So, Arvind, all your answers are correct. Very good, Arvind. So, Arvind was the first one to answer. Arvind AS was the first one to answer. Second, Ankit Gupta. Yes, your answers are correct. Very good, Ankit. Mantanjali, you have just mentioned only one answer. I just want all the three answers. Okay, Vaishali Agarwal, please recheck the question. Your one answer is incorrect. Rest all are correct. Vikas Bansal, very good. All your answers are correct. Just check the number of zeros in the first answer. Rest all everything correct. Mantanjali, your answers are correct. Okay, Karthik Gupta, desired sales is incorrect. Karthik Gupta, I think you have Karthik Gupta, please recheck your answer. Rashmin Kumar, your answer is incorrect. Isha Jaiswal, please check the number of zeros. Super incorrect answer. All the answers are incorrect, Isha. Neha Murarka, very good. Your answers are correct. Madhuri, please recheck your answers, Madhuri. Your answers are incorrect, Madhuri. Neha Murarka, correct answer. Gosim Farhan Ansari. Okay, perfect. Your answers are correct. Neha Murarka, your answers are correct. Amritpal Kaur, very good, correct answer. Mohammad Farad, correct answer. Himanshu Gupta, all of the three answers are correct. Shivam Singh, all the three answers. No. Shivam Singh, your one last answer is incorrect, Shivam. Pradeep Gupta, very good, your answers are correct. Tanya Patkar, very good morning, Tanya. So, your answers are correct. What about the last answer? Shivam Durya, very good, Shivam. All the answers are correct. Pooja, please check what is the question. Pooja PS. Madhuri Nikhare. No, Madhuri, your answers are incorrect. Now, Mantanjali, all the three answers are correct. Prabhas Jain, very good. All the three answers are correct now. Menka Kumari, incorrect answers. All the answers are incorrect. I'm surprised, Menka. Shivani, very good. But please check the question. Question number 2 is, he's asking for units. Question number 2 is asking for units, not in rupees. Be very clear with your answer. जो भी examiner पूछे, answer it accordingly. Examiner don't want this and that. Karthik Gupta, now it is correct. Nidhi Parekh, incorrect answer. This units part is incorrect, Nidhi. Mohammad Farad, incorrect answer. Swati, correct answer. Tisha, still few are not being able to answer. Neha Verma, your calculations are correct. What about the last answer? Gosim Farhan Ansari. Correct answer, Gosim. No worries, Rashmin, it is 14 only. Pooja PS, your answers are correct. No worries, Mangeshwaran. So when talking about this question, my first PV ratio will be how much? That is 6 divided by 20 into 100. So this will be 30%. Now break even sales in rupees. Very simple, fixed cost divided by PV ratio. So my fixed cost is 7,92,000 divided by my PV ratio, that is 30%. So 26,40,000. My second question, break even sales in units. Fixed cost divided by contribution per unit. So fixed cost is 7,92,000 divided by 6. So this will be 1,32,000 units. Now the third part, number of units sold to earn a profit of 18 lakh. So desired sales in units only, the examiner is asking So fixed cost plus desired profit divided by contribution per unit. So my fixed cost is 7,92,000. My desired profit is 18 lakh divided by my contribution per unit, that is 6. So 4,32,000 units. So this is the way you have to write the solution. No worries, Menka. That's completely okay. Very good, Mangeshwaran. No worries at all, Mangeshwaran. So guys, done with this question. Whosoever want to copy the pattern of the solution. So this is the way you have to start the solution. Now the third question. My fixed cost is 90,000 rupees. My variable cost is 70% of sales. And my margin of safety is you have to calculate actual sales and profit. Yes, Nidhi, your rupees answer was correct, but the units was incorrect. No worries, Madhuri, that's completely okay. Jiten Mojitra, I'm not getting your answers, my dear. No worries, now I have just got a post that, sir, I'm confused, my answers are reaching to you or not because it is not shown submitted successfully. No worries, Jiten. Mantanjali, you have to write the formulas and then write the solution. This is the way. That's why I have presented the solution accordingly. Now guys, let's see who answers first. Waiting for your answers. I'm just waiting for the first answer, that is actual sales, and the second answer, that is profit. The fixed cost is 90,000 rupees. Okay, now I have got the answer, and I think Ankit Gupta was the first one to answer. Very good, Ankit. I've got the answer from Ankit Gupta, and Ankit Gupta was the first one to answer. And Ankit, your answers are correct, Ankit. Both the answers are correct. Very good, Ankit. Okay, I've got answer from Himanshu Gupta. Himanshu Gupta, your answers are incorrect. So I've got answer only from Ankit Gupta, and Ankit Gupta, your answers are correct. Now Shivam Singh, both your answers are correct. Very good. Arvind, very good. Both the answers are correct. Gosim Farhan Ansari, incorrect answer. Vikas Bansal, incorrect answer. Waiting for your answers on this question. Vikas Bansal, incorrect answer. So I have got correct answer from only Ankit Gupta, Shivam Singh and Arvind AS. Rest all. Sundhya Agarwal, correct answer. Amritpal Kaur, your actual sales is correct, but your profit is, okay, your profit is also correct. You have, I think, written 2 by mistakes. Rest all it is correct. Shivam Durya, incorrect answer. Prabhas Jain, correct answer. Sumit Kumar, your answer is incorrect. Still I'm waiting for your answers. Madhuri, Tanishka, Shivani, Mohammad Farad, Madhuri, where are you guys? Waiting for your answers. Tanishka Agarwal, incorrect answer. Alok Kumar Chaudhary, I appreciate your efforts, but your answer is incorrect. Nidhi Parikh, correct answer. Neha Murarka, incorrect answer. Subhash, incorrect answer. Bharat M, incorrect answer. Muskan Kumari Gupta, incorrect answer. Rahul, incorrect answer. Vikas Bansal, incorrect answer. Tisha, very good, your answers are correct. Pooja PS, now you have to apply your brains. From my side, this much is the question, Pooja. Nidhi Parikh, incorrect answer. Neha Murarka, incorrect answer. Tisha, correct answer. Tanishka, please recheck your answer. Madhuri, Shivam, Madhuri, Nalini, Rajiv Kumar Das, Yashashri, waiting for your answers, guys. Vaishali Agrawal, your answer is correct. Shivani, incorrect answer. Isha Jaiswal, incorrect answer. Menka Kumari, incorrect answer. Ritika Verma, correct answer. Yes, the information is more than sufficient. Mr. K, good morning. So your answer is correct. Atulya, correct answer. Shivam Durya, Janvi, both of your answers are correct. Nalini and Rajiv Kumar, where are you guys? Waiting for your answers. Shivani, your answer is incorrect. Please recheck your solution. Okay, I'm really sorry, Sandhya. It was written Sundhya, that's why. Swati, incorrect answer. Karthik Gupta, I do expect a quick answer from your end. You're too late to answer, but anyways, your answer is correct. Pradeep Gupta, I'm surprised your answer is incorrect. Nidhi Parikh, very good, your answer is correct. Pooja Dayara, madam, answer incorrect hai aapka. Okay guys, now let's start with the solution. So herein, my variable cost is 70% of sales. It means my PV ratio is how much? 30%. Now, we will calculate the break-even sales first. And it is fixed cost divided by PV ratio. So, fixed cost is how much? 90,000 divided by 30%. So, this will be 3 lakh rupees. So, now we have break-even sales. Now, as I told you guys, actual sales can be divided in 2 parts. That is break-even sales and margin of safety sales. as the formula itself we discussed, actual sales minus break-even sales is margin of safety. Himanshu Gupta, correct answer. Nalini, I understand it happens sometimes, so no worries. Very good, Neha Verma, your answers are correct. Vikas Bansal, correct. No worries, Sandhya, but I won't. Don't worry. Dada Subhash Dete, incorrect answer. So now, as I told you, actual sales minus break-even sales is margin of safety. So margin of safety is 40% of actual sales. So how much will be the break-even sales? Break-even sales will be 60% of actual sales. So this 3 lakh is 60% of actual sales. Therefore, rupees 5 lakh will be my actual sales. Nothing new, guys. I have already discussed all these things in detail. When talking about the calculation of profit, very simple, guys. My actual sales is how much? 5 lakh. My variable cost is how much? 70%. So 3,50,000. So my contribution will be how much? Very simple. This will be 1,50,000. My fixed cost will be how much? 90,000. So my profit will be 60,000. A very simple question, guys, but yes, you guys have to be thorough with the concept. So this is an example wherein the formulas are of no use if you guys are not thorough with the concepts. I understand few were not being able to answer, but yes, this chapter requires lots and lots of practice for more clarity of concepts. So this is the way this question will be solved. No worries, Karthik, that's completely okay, my dear. Mantanjali, now your answers are correct. Very good, Neha, now your answers are correct. So the thing is, formulas are not more than sufficient. If the question is straight, the first 2 questions were very straight, so many of you were able to answer. But yes, this question was a bit trickier than the last 2 questions. So herein, no use of all the formulas. You have to be thorough with the concepts of the chapter to solve this question. So Nalini, I hope you are thorough with what is there in the question. Any doubts, guys? I request you guys to please copy the solution. No worries, Shivani. Yes, Neha, I know the 3 lakh was break-even sales and your answer was incorrect. Siddhapa Kamble, sir, how did you calculate PV ratio? Herein, my dear, as I told you, sales can be divided in 2 parts, that is variable cost and contribution. So if variable cost is 70% of sales, the contribution will be 30% of the sales, and that is what my PV ratio. That's completely okay, Sneha. नलिनी, आपको समझ में आया या नहीं? नलिनी, waiting for your answer. Nalini, I hope you are clear. I think you are clueless how to start the question. So this is the way the question is to be solved, Nalini. Yes, Rafika Mehman, your answers were correct. I in fact mentioned your name also, Rafika. One more question, guys. Selling price per unit 20. There are n number of n number of ways to solve the question. So now selling price per unit is 20, variable cost per unit is 14, fixed cost 7,92,000. Now calculate number of units to be sold to earn a profit of 10% of sales. Calculate the number of units to be sold to earn a profit of 10% on sales. So waiting for your answers, guys. No worries, Rashman Kumar. This is 14. Okay, so Himanshu Gupta is the first one to answer and your answer is correct, Himanshu Gupta. Prabhas Jain, your answer is correct. Waiting for your answers, guys. So Himanshu Gupta was the first one to answer. Prabhas Jain, very good. Now Preeti Panchal, your answer is incorrect. Karthik Gupta, incorrect answer, my dear. Vijay Gore, incorrect answer. Vimal Kumar, incorrect answer. Preeti Panchal, incorrect answer. Menka Kumari, incorrect answer. Mr. Subhash, incorrect answer. I've got correct answer from only Himanshu Gupta and Prabhas Jain. Rest everyone, your answer is incorrect. Okay, Nidhi Parikh, your answer is correct now. Nalini, incorrect answer. Tanya, incorrect answer. Mr. K, incorrect answer. Mr. Deepak Goyal, incorrect answer. Vimal Kumar, incorrect answer. Rafika Memon, incorrect answer. Okay, Madhuri Nikare, let me check. Madhuri Nikare, your answer is incorrect. Nalini, incorrect answer. Tanya, Subhash, Menka, Nidhi, Vimal Kumar, Vijay Gore, your answers are incorrect. Preeti Panchal, incorrect answer. Karthik, incorrect answer. Mantanjali, very good Mantanjali, your answer is correct. Bharat M, Vikas Bansal, Manoj Kumar, Sumit Kumar, all your answers are incorrect. Yogita Kumar Devda, your answer is incorrect. Mohammad Farad, your answer is incorrect. Mohit Chaudhary, incorrect answer. Deepak Goyal, incorrect answer. Nidhi Parikh, your answer is correct. I'm sorry. Nidhi Parikh, incorrect, correct answer. Nidhi Parikh, correct answer. Preeti Panchal, incorrect answer. Mantanjali, correct answer. Bharat M, incorrect answer. Sumit Kumar, incorrect answer. Arvind AS, I think your answer is incorrect for the first time. Arvind, your answer is incorrect, my dear. Mohammad Farad, Mohit Chaudhary, Pooja PS, Ritika Verma, Preeti Panchal, all your answers are incorrect. Karthik Gupta, incorrect answer. Manoj Kumar Kale, your answer is correct. Janvi, Vimal Kumar, Karthik Gupta, Vijay Gore, Mangeshwaran, Jiten Modra, all your answers are incorrect. Now Tanya Patkar and Manoj Kumar Kale, your answer is correct. Pooja PS, incorrect answer. Pooja Dayaram, incorrect answer. कार्तिक भाई आंसर इनकरेक्ट है. कार्तिक गुप्ता इनकरेक्ट आंसर. शिवम सिंह इनकरेक्ट आंसर. Rajiv Kumar Das, where are you? Waiting for your answer. Nalini, your 44,000 units was incorrect. Shivani, waiting for your answer. Tanishka Agrawal, waiting for your answer. So now, calculate the number of units to be sold to earn a profit of 10% of sales. So let the units sold be X. Let the units sold be X. So my sales will be how much? 20X. My variable cost will be 14X. My contribution will be 6X. My fixed cost is 7,92,000. Now it is said that the profit should be 10% of sales. That is 10% of 20X. That is 2X. So 6X minus 7,92,000 should be equal to 2X. So X is equals to 1,98,000 units. So again, no use of formulas. Only you have to be thorough with the concept. So Bharat M, your answer is correct. Jiten Modra, your answer is correct. Mangeshwaran, I think you are able to solve this time. So your answer is correct. Shivam Singh. Further, please copy the solution for those who are not being able to solve. In marginal costing, there are more than one ways to get the solution, but yes, the final answer will be the same. So this is the best and the easiest approach I have used. Yes, Jaya Agrawal. So guys, done with the basic concepts of this chapter. Further, I have discussed few questions. Very good, Hitesh Jain. So let's take a break of 10 minutes and then we'll start with the remaining part of the chapter. What if in case two period figures are given and plus one concept on decision making? So let's take a break of 10 minutes. We'll be back after 10 minutes with the remaining part of the chapter. So in the meanwhile, you guys did a lot of exercise. So have a cup of tea and we'll be back after 10 minutes. So let's take a break. Admin sir, are you there? Welcome back, guys. After the break, so there is a query from Mr. Farad that said how you calculated 2x. 2x is basically 20x into 10%. This is how I got 2x. Anyone else having any doubts in the basic part of the chapter, guys? Anyone else? I've discussed 4 questions. So anyone, if you have any doubts? Yes, Vikas Bansal, there are many ways to solve a particular question in marginal costing. What the thing that matters is the final answer. So guys, now let's start with one more concept. Let's say 2020 and 2021. The 2 period figures are given. Let's say the sales is 1 lakh and 2 lakh. Now my profit is also given. Let's say 30,000 and 70,000. Now the question is, if the examiner is asking us to calculate PV ratio, how to calculate PV ratio? So now guys, here the data of sales and profit is given. Now there is a formula that is given in the material. Change in profit divided by change in sales into 100. Now, why this formula again? Again, this formula is more or less similar to the formula we have discussed, that is contribution divided by sales into 100. So once we calculate the contribution, we deduct the fixed cost in both the years. Now in both the years, the fixed cost remain constant. So herein, if there is any change in profit, it is due to change in contribution. It means the fixed cost is constant in both the years. If there is any change in profit, it is basically the change in contribution. So ultimately, we are using the same formula, that is contribution by sales into 100. But since the contribution is not given, so we are using change in contribution divided by change in sales into 100. Again, I repeat, change in profit means what? The change in contribution, because the fixed cost will be constant in both the years, that is 2020 and 2021. So here in this case, the change in profit is how much? 40,000 divided by change in sales is 1 lakh into 100. So 40% is my PV ratio. We can easily calculate the fixed cost. That is, sales is 1 lakh. Variable cost will be 60,000. My contribution is 40,000. Fixed cost is not there, but profit is given. That is 10,000. Sorry, 30,000. Therefore, my fixed cost will be 10,000. In 2021 also, we can prepare the statement. That is 2 lakh is my sales. 1,20,000 will be my variable cost. So 80,000 will be my contribution. My profit is 70,000. So this 10,000 fixed cost is my balancing figure. And fixed cost is constant in both the years. So
if the 2-period figures are given, ultimately we are using the same formula, that is contribution divided by sales into 100. But since the contribution is not available, we are using the profit. Why profit? Because profit is changing due to change in contribution. Fixed cost is constant in both the years. So that's why this formula is prepared. Now, Madhuri Nikare sir, how to start the solution? To be very frank, it requires lots and lots of practice to be more clear. I mean, it requires lots and lots of practice for to write solution in a quick way. So the thing is, practice is the only solution. If you guys have any doubts in this part, you guys can ask me. Waiting for your queries, guys. Change in profit, that is 70,000 minus 30,000, I got 40,000. I repeat again, Siddhappa, 70,000 is the 70,000 minus 30,000, 40,000 is the change in profit divided by change in sales, that is 2 lakh minus 1 lakh. One more question for you guys. So you guys have to calculate the PV ratio. The sales is given, that is 2 lakh and 4 lakh. And the total cost is given, that is 1,20,000 and 1,80,000. So you guys have to calculate the PV ratio. So waiting for your answers, guys. Quick, Arvind, Himanshu Gupta, Pradeep Gupta. Karthik. Waiting for your answers, guys. Sales is given, that is 2 lakh and 4 lakh. Total cost is given, that is 1,20,000 and 1,80,000. So what will be the PV ratio? Quick, guys. Okay, I've got answers. Neha Murarka, Arvind AS, Neha Murarka, Karthik Gupta. The PV ratio is constant in both the years. Okay, so Neha, your answer is correct. The first one to answer was Neha. Arvind, your answer is correct. Karthik Gupta, correct answer. Isha Jaiswal, incorrect answer. Rest everyone correct answer. Jitendra Mojitra, incorrect answer. Mantanjali, correct answer. Riya Jaiswal, correct answer. So since the total cost is given, we will calculate the profit, and the profit will be 80,000 in the first year and 2,20,000 in the second year. So my change in sales will be 2 lakh and my change in profit will be 1,40,000 in 200. So this will be 70%. One more question, guys. Let's say my sales is 1 lakh in 2020 and 2 lakh in 2021. In first year, the loss is 15,000 and in the second year, the loss is 25,000. Sorry, the profit is 25,000. What will be the PV ratio? In the first year, there is a loss of 15,000 and in the second year, there is a profit of 25,000. So what will be the PV ratio? Yes, Shivani, I've got your answer. Since most of the students' answer were correct, so didn't mention the name. Menka Kumari, answer incorrect. There is only one PV ratio, my dear. Prabhas, I didn't receive your answer only, my dear. Okay, Prabhas, I got your answer. But I think the first answer what I got is from Neha Murarka. Okay, so I've got answer from Himanshu Gupta. And Himanshu, your answer is correct. Arvind AS. So Himanshu Gupta was the first one to answer. Arvind AS was the second one to answer. So both your answers are correct. Now, Hitesh Jain, incorrect answer. Ankit Gupta, correct answer. Vijay Gore, incorrect answer. Tanishka Agarwal, I'm surprised. Read the question carefully. Your answer is incorrect, Tanishka. Yes, Nalini, Rajiv Kumar, Rafika Memon, Shivani, where are you guys? Quick. Shivam Singh, Ritika Verma, Jiten, your answers are correct. Mantanjali, correct answer. Nidhi Parikh, correct answer. Rafika Mehman, incorrect answer. Ankit Gupta, correct answer. Menka Kumari, incorrect answer. Tanishka Agarwal, incorrect answer. Mantanjali, it is correct now. Tanishka Agarwal, incorrect answer, my dear. Rajiv Kumar Das, 40%. Yes, it is correct answer. So when talking about the change in profit, in the first year there is a loss of 15,000 and in the second year there is a profit of 25,000. So overall change in year 1 and year 2 is how much? 15,000 to 0 and 0 to 25,000. It means there is a change of 40,000, that is 25,000 minus 15,000. Divided by 1 lakh. So this will be 40,000. Ramakrishna, yes, your answer was correct. I got your answer, Ramakrishna. Shivam, yes, I have got your answer. Mr. Subhas, yes. I'm really sorry again, Prabhas. So this is all what about if the 2-period figures are given. The question is how to calculate PV ratio. So if you guys have any doubts, you guys can ask me. Waiting for your queries. Else I'll start with the next part of the chapter wherein 2 products are given. And the question is how to calculate break-even sales. In the first year, there is not a profit but a loss of 15,000. So 15,000 is the loss, and second year it is a profit of 25,000. So what is the change in year 1 to year 2? Very simple. 25,000 minus 15,000. So this will be 40,000. And guys, few of you guys are posting two answers, that is a separate PV ratio for 2020 and for a separate PV ratio for 2021. I repeat again, guys, if the question is silent, PV ratio will remain constant at all the level of sales. So guys, let's start with the next part of the chapter. We are done with the basic concepts of chapter, that is PV ratio, break-even sales, desired sales, margin of safety. What if in case if 2-period figures are given, how to calculate PV ratio and fixed cost. Almost the syllabus is over, Mr. Lavkush Kumar. No worries, Preeti, that's completely okay. So now, So let's say the company manufactured two products A and B. Let's say the company manufactured two products. Okay, there is a query from Karthik Gupta, sir. If the PV ratio is same, then how come there is a loss and profit in another year? So in the first year, the lesser number of units are sold, and in the second year, the number of units sold are much more than the previous year. So in the previous example also what we took, there was 300 units, we were getting break-even sales. So once you goes below 300 units, there is a loss to the company. I repeat again, break-even point is the point where there is no profit and no loss. So let's say my break-even point is 5,000 units. So if my production and sales goes below 5,000 units, there is a loss to the company, because after recovering the variable cost, we are getting contribution, and our contribution should be that much so that at least we can get 5,000, and our contribution should be that much that at least we should be able to recover fixed cost. That is break-even sales. So if in case if we are not being able to recover our fixed cost, that is possible when the number of units sold are less than break-even sales. So let's say 4,000 units are sold. It means the company will suffer loss, Karthik Gupta. So if the production and sales is below break even, there will be a loss to the company. Even if the production and sales is more than break even sales, it will be a profit to the company. That's why there was a loss in the first year and a profit in the second year, Karthik. Siddhappa Kamble, when talking about change in profit, the first year there was a loss of 15,000. There was a loss of 15,000 and there was a profit of 25,000. So when talking about change in profit, 25,000 minus 15,000 we have to find out. Divided by 2 lakh minus 1 lakh. So my change in sales will be 1 lakh and my change in profit will be 40,000. How come 40,000? 25,000 minus plus 15,000. This is how I got 40,000. So 40,000 divided by 1 lakh into 100, that is 40,000. It's already 9:20, guys. Now I won't be able to cover this part. I won't be able to cover this sales mix part in detail in this session. So there is one more session of marginal costing. We'll be discussing all the decision-making problems. So let's discuss one more question on marginal costing for more clarity. I'm discussing illustration number 4 of the study material, guys. I'm discussing illustration number 4 of the study material because the time is running and it will take approx 20 minutes to discuss the concept of sales mix. So let's start with illustration number 4 first. And then we will start with the sales mix concept, key factor concept, make or buy decision concept in the next session. I request you guys to please open your study material. I'm discussing illustration number 4, PQR Limited. So herein, in PQR Limited, the following data for the 2 years are given, that is 1920 and 2021. Further, it is given that the sales is 8 lakh and the second year sales is missing. Further, the PV ratio for first year is 50% and the second year is 37.5%. It means what? There is some change in selling price per unit and or variable cost per unit. We have to figure out. Further, the margin of safety sales is 40% of the total sales in the first year and 21.875% in the second year. Now, there has been a substantial saving in the fixed cost in 2021. It means it is clearly mentioned that there is a saving in fixed cost. It means the fixed cost is changing in 2021 due to restructuring process. The company could maintain its sales quantity level of 2019-20 in 2021 by reducing its selling price. So 3 points, guys. Fixed cost is changed. Is reduced due to restructuring. What is this restructuring? Your accounts professor has already discussed in amalgamation. So fixed cost is reduced due to restructuring. Second point, the sales quantity is the same. In both the years. And third point, company has reduced the selling price. So this is what the information given in the question. I wish I could, but again, many students has to go for articleship. Else, I would have extended the class, Karthik. Anyways, thank you so much, Karthik. Thank you so much, Rajiv Kumar. Thank you so much, Subhash. So now, here in the extracts of this question is that fixed cost is reduced due to restructuring. Sorry. Sales quantity is same in both the years and company has reduced the selling price. So now let's solve the question. Let's start with 1920 first. In 1920, my sales is 8 lakh. My variable cost is 50% of, so this will be 4 lakh since the PV ratio is given, that is 4 lakh. So my contribution will be 4 lakh. Fixed cost is not there, but we have profit. Margin of safety is given, that is 40%. %40 of total sales. So margin of safety sales will be how much? 8 lakh into 40%. That is 3,20,000. Therefore, profit will be how much? Profit divided by PV ratio is margin of safety sales. So if we multiply margin of safety sales with PV ratio, we will get profit. So profit will be margin of safety into PV ratio. Now, how come I am getting these formulas? Because I am thorough with the concept. So you have to practice a lot for to solve the question quickly. So here in my margin of safety sales is 3,20,000 into my PV ratio, that is 50%. So my fixed cost will be 1,60,000. So this is what 1920 data is given in the question, that is the sales is 8 lakh. Since the PV ratio is 50%, it means my contribution will be 4 lakh. My variable cost will be 4 lakh. Further, since fixed cost and profit are not given, so we have calculated this is the balancing figure. Margin of safety sales is 40% of the total sales. My total sales is 8 lakh. It means margin of safety sales will be 8 4 32, 3,20,000. Now, what is margin of safety sales? The extra sales over and above break-even sales. Now, for that extra sales, whatever the contribution will be, that will be the profit. So, simply 3,20,000 into 50%, 1,60,000 will be my 1,60,000 will be my profit, and 2,40,000 will be my fixed cost. So this is for the year 1. Now guys, the first question what the examiner is asking, that is what is the sales for 2021 in value? So these are the extracts of the question. I request you guys to please copy this part. That is the fixed cost is reduced due to restructuring. The sales quantity is the same in both the years, and company has reduced the selling price. And since the company has reduced the selling price, that's why the PV ratio is changing. Now guys, very important part. Sorry guys, I wrote it by mistake. Now guys, very important part, very, very important. See, the units are not changing. There is a change in PV ratio. Why? Because of the reduction in the selling price. The sales quantity, the variable, the sales quantity is same in both the year. But yes, in year 2, the selling price is reduced. It means what? Variable cost in the first year and second year is same. I repeat again, guys, since there is no change in sales quantity, first point. Second point, why PV ratio is changing? Not due to reduction in variable cost per unit, but due to change in selling price per unit. It means what? Variable cost is same. Why variable cost is same? First, no change in sales quantity. Second, no change in variable cost per unit. So this 4 lakh we have got. Now the PV ratio is 37.5%. Therefore, variable cost will be 62.5%. Therefore, sales will be how much? 4 lakh divided by 62.5%. So 4 lakh divided by 62.5%. This will be 6,40,000. So my sales will be 6,40,000. My contribution will be 37.5%. And this will be 2,40,000. When talking about fixed cost and profit, the calculation will be the same. It is given that margin of safety sales is 21.875% of the total sales. So margin of safety sales will be 1,40,000. Further, when talking about the profit, we can easily calculate profit as is 1,40,000 into 37.5%. So this will be 52,500. So profit will be 52,500. So my fixed cost will be 187,500. So the question is easy. You have to read the question carefully and apply your concepts. Rest all the concepts are same only. Very good, Madhuri. If you guys have any doubts in this question, you guys can ask me, waiting for your queries. If not, a final tip from my side. So before this, if you have any query, you guys can ask me, just giving you 2 minutes time for any query on this question. Any queries, guys, on this question? Now, very important, guys, an important tip for this chapter. First and the foremost thing, how to approach the practical questions. So very important, guys, initially try to memorize the concepts, what I have discussed in detail in class. Thereafter, solve the same questions what I have discussed in the class. And thereafter, better it is, it's a personal recommendation from my side, not to start with the material initially. I assure you guys, you will feel more comfortable while solving the questions of study material, because there are lesser number of questions in the study material, and apart from this, few are very tricky. So you guys need to be very thorough with the concept before starting with the study material. Only this chapter, Mangeshwaran, not all the chapters, only in marginal costing. That's it. Because the concepts need to be thorough before starting with the study material question. My dear Nidhi Parekh, here the sales is reduced from 8 lakh to 6 lakh 40,000. Why? Because of the reduction in the selling price, what the question is saying. So guys, done with today's session. I request you guys to solve some graduation level questions before coming to the next class, because next class I'll be discussing more trickier question. So I want you guys to be thorough with the concept before starting with the next class. I don't want you guys कि आप लोग इधर-उधर देखें कि sir what the sir is discussing. So come prepared for the next class with at least 40 to 45 questions practice. So in the meanwhile, enjoy your day. See you day after tomorrow. Thank you very much for posting the answers and attending my sessions. So thank you so much for your time and patience. God bless you, and do practice for today and tomorrow. At least 40 to 45 questions from the graduation level book. Thank you so much. God bless you. Have a great day.